Welcome guys to my YouTube channel. This is the YouTube channel of Pimp Institute and my name is Joseph. Yes, thank you guys for staying with me to this moment. I really appreciate you guys. Uh, I'm sorry for not uploading some videos recently for the past 2 weeks or thereabout. That was because I had a little engagement that I needed to fix and just to get it done with and then before I could get back online. And thank you for patiently holding on for me with me and understanding. So today I have a very interesting topic to speak on, and today I'll be talking about divergence. Divergence. Some of you might have heard about divergence before, and you might not even know how to trade using divergence. Some of you might just have not even heard about it before, and then you might like, what does divergence really means? Actually, the trading is kind of wide, but as wide as it is, you don't just need to learn everything. You only need to learn few things that is going to make you profitable. So before we continue in the video, if you know you are new to my YouTube channel, kindly make sure you subscribe to my YouTube channel, please, and make sure you turn on the notification bell so you can get notified each time I upload this content. And at the end of this video, if you find this video very informative and educative, and you find value in it, you are going to do well to make sure you like the video. And if you feel that you need to share it with one or two of your loved ones so they can also enjoy the same content you are enjoying, you can also go ahead and do that. So that being said, let us dive into the topic for today: divergence. Now, what is divergence? Divergence has to do with the differences, I'll it now, the difference in charts and the oscillator indicator. So when you have a difference in price in the charts and the oscillator, then you know that you have a divergence, because ideally, if the market is moving up, the oscillating indicators also should move up. When I mean oscillating indicator, I mean oscillating indicator that you have to put below your chart. Like we have the RSI, we have the MACD, we have the stochastic, we have the TDI. These are all kind of oscillating indicators, and there are lots more of them. But personally for me, these are the ones that I can say about, and not even everything that I make use of. I only make use of the RSI and the TDI. So when I'm talking about divergence, you can have a RSI divergence, you can have a stochastic divergence, you can have a MACD divergence, you can have a TDI divergence. Okay, you can even have a moving average divergence. Okay, but personally to me, I find uh, value and interest on RSI divergence and the TDI divergence. So these are the two that I make use of. Any other one, I don't look at them. So because I don't look at them does not really mean that they don't work. They work. So actually, it is the same concept that guides the RSI divergence and any other MACD, stochastic, or any other oscillating indicators. It's the same concept. Anything I explain here, it also applies to any divergence of any oscillating indicator you want to use. You just need to understand the concept and you can make use of it with using any oscillating indicator. Like I said, that it is a price difference between the charts and the market. Okay, like let's say for instance, if the market is giving you higher highs or the market is moving up, then you should expect that the oscillating indicators too should be moving up, not showing downward movement. But when you have a case whereby the chart is going up and the market is pointing down, so such case, you know that this is a divergence, a clear divergence, and in such case you want to follow the oscillating indicator, that is the oscillating divergence, because that is divergence, because they are both now speaking, they are not in agreement, they are both speaking different language, and and at this point you don't know what to follow again. So you want to choose your best partner, and the person that you have to follow is you have to follow the oscillating indicator, because sooner or later the market will start selling. Are you with me? And if the case is vice versa, the market is giving you a downtrend, and then there is an there is in like the oscillating is showing a uptrend, then you want to follow the oscillating indicator and start buying, because sooner or later the market will start buying and reverse from a sell. So that being said, let us look at it on the charts. Actually, you can make use of it on any kind of time frame: 1 hour, 2 hours, 5 hours, 15 minutes. You can always find your divergence in every of the time frames. So this is BTC USDT on the 1 hour time frame. So how do we make use of this? Now just follow me as I move on. Now look at this. Look at this, guys. Here is the 1 hour time frame. Now look at from here to here. It was a downward movement. If you have to plot a line, when you plot a line from this level just to touch this level, it's down. But when you look at this thing, when you look at the RSI moving average, you are going to see that it is moving from here to here. You can see that it is moving up. So the market has to carry bull. So what you want to do is that at this point you want to buy. If you are buy, you'll be in profit. Can you see that it usually works? Now from here to here, it's actually, when you plot a line from here to here, it's going to be going up, right? But in this place, in this RSI divergence, when you plot the line from here to this level, it is going to be showing downward trend, so it's going to be a sell. So when you want to sell it, so when you sell it like this, so you can see that it actually really sold. So also from here to here, if you should plot, if you draw a line, it's going to be showing you, it's pointing up, right? But on the RSI divergence line, when you plot line from here to here, it's showing you, it's pointing down, which is signal for what? For you buy. You can see that if you had buy, you're being what? You're being profit. It's sold. So that is how you can use it on any pair. I'm telling you, it works on any pair and on any this thing, on any time frame, okay, that you feel like you want to use. It really works. Look at, let's look at here. When you see from here to this point, at this point, the market was showing up. If you plot a line from here, it will be up, right? But if you plot a line from here to here, it's going to be showing you a downtrend. The line will be pointing downward, right? As you can see, it's writing bear. So from here to here, if you plot that line, it will point upward. But you right here, if you plot it on your RSI, it will be pointing downward, which is a divergence. So that means you have to sell. If you have to sell, look at you are being massive profit. So again, it really works. It really works. You want to make sure that you trade this as best as you can. Okay, take a look at this also. Look at from here. If you have to plot from here to here, if I should plot it from here, it will be showing downward. But if you have to plot it from here to here, it's showing upward, which means it's a buy. And if you had bought from here, from this level, you have been massive profit. I hope you get what I'm saying. So also from here to this level, if you had plotted it, it will be downward movement. But here in the RSI, it is upward movement. So you want to buy. So when you buy, you'll be in profit. So this thing works for every pair and any kind of market condition you can find yourself in. Trading on. Now, I'm not saying that you start using RSI to start trading, but I'm saying that you can add it to your confluence in your strategy. Just add it, okay? Now, what I'm presently using, I'm using an auto plotting RSI on your trading view. All you just need to do is go to trading view, just in the indicator section, just write divergence indicator. When you write divergence indicator, just click on it. Just click on it, then it's going to bring you, it's going to show you all this. Okay. So let's look at gold on the 1 hour time frame. You can, like I said, you can use it on any time frame you so wish for. Let's look out for gold. Okay, gold year. You plot it here. From year to year, look at it. It's a what? It's going to show you upward, but here downward. Now, if you start selling, you're going to be making profits at around this level. And don't forget, we are on the 1 hour time frame, and this is gold. You know how volatile gold moves. You know how volatile gold moves. So sometimes you might not experience big movements. Sometimes it might just be a minor movement. That's why I said you don't want to use RSI. I mean divergence on its own. You want to make use of. You want to add it to some confluences. You want to add it to your strategy so that okay, probably you have a strategy that you already have in place. Probably you want to use it as an additional confluence. It's very RSI is very good as an additional confluence. When you add it to your trading style, I'm telling you, it really helps to confirm the direction of what you've expect or suspect the market to go to. That being said, I hope you find value in this video, and I hope you find great content from this video. If you know you do, if you know you do, don't hesitate to smash the like button, and please subscribe and turn on the share bell. If you have any question, you can drop it on the comment section below. I'm going to be posting a link. You can click on the link. It's going to direct you to my personal line. You can chat me up on WhatsApp so we can talk. If you have any question you want to ask, you can ask me there, and I'm going to do what to answer you. And if you feel that okay, you want to subscribe to my mentorship class, to be one of the mentors one of my mentees, you can then chat me up. Then we can talk more on joining my mentorship group. So that being said, I wish you a great success in trading this week, and keep making the money and keep milking the market makers. Until I come away next time, bye bye.